Hello, this is Jeff Green, and welcome to another edition of Market Timing and Analysis. This week is week 3 coming up, starting January 17th of 2022. So please like, share, and subscribe to this video channel if this helps. We're going to talk about a couple of things this week. We're going to look at the broad market and what we can expect going forward. I'll show you this week's top stock watch list and how that's changed from last week, especially with earnings season right around the corner. And I'll also show you where you can download that for yourself. So it won't be a long video, but it's just a weekly market update. So what I have on my screen is the familiar VTI ETF, which is the, in my opinion, the best indicator of the broad market action, as opposed to looking at the individual indexes, which unfortunately are looking a lot worse this week. But let's just look at the broad market here. Weekly on the left and daily on the right. And I'll enlarge this a little bit so we can see what's going on. On the weekly, there was sort of a long-legged doji, which is a sort of a major indicator of indecision by market participants. You can see again that let me get my pen out here. Okay. Sorry about that. In this area, you can see quite clearly that there's been pretty much no increase in volume on up days. That's kind of unfortunate and sort of indicates where we are in the major players while they try and get out of position sort of at the top of the market. You got sort of large down days here. We have this continuing bearish divergence on the weeklies. You would like to see, when you get at least an equal high, you would like to see an equal high or better on the indexes. The unbalanced volume is diverging down. Advanced declines are diverging down. And of course, you have the DI plus over the DI minus, DI minus over the DI plus, which is again negative. So this week, I added this downtrend line, and this is more easily seen on the daily chart. So let's sort of scooch over here to the daily chart, and we'll look at what's going on in the daily averages. Daily averages have now closed below the uptrend line that I've talked about for several weeks as being a critical point of support. So it remains to be seen whether the buy the dip traders will push this back up. But let's look at the last few buy the dip events here. We had this big down day here. Let me get my pen back. Sorry, let me get my pen back. So we had this big down day here, and then we had one strong up day, and then another doji, indecision doji. That's the buy the dip reaction from last week. Then we had this one from a couple of weeks ago, and we had 1, 2, 3, 4 good buying days before we again hit this high that I have mentioned several times. We need to close above this to have any indication that the uptrend has renewed. This is the same old uptrending line across the bottoms, which has been firmly broken now, how many times? 3 times in the last couple of trading weeks, or at least last week. We again see this increasing selling volume on the down days, which is an indication that big players are getting out of the market. There was no, except for back here on the buy the dip activities, there was no volume days that were higher on up days. That's an important indication. What you want to see on an uptrend here is the opposite, or at least I should say a strong market. You want to see expanding volume on days when prices go up. This is a very bearish sort of indicator. We now have a very distinct, you got this flat line here on the highs, and then you have a very strong bearish divergence on the MACD. That's an indication of bearishness. We now have the MACD below the 0 line, which is not good. You need to be above that to indicate a strong market. We've got the same sort of bearish divergence, although it's not real strong on the unbalanced volume. You'd like to see that going up when, or at least staying flat when you have highs up here. Unbalanced volume is just showing a sell-off here. We have yet to get the advanced decline line above the moving average of advanced declines, which is another ominous sign. You see back here in this area when the advanced decline was clearly above the 9-day moving average. That was when we had this big rally over here. So that's really what you're looking for. And then, of course, on the daily basis, you've got the DI minus crossing above the DI plus, which is another bearish indicator. So let's take a look at what we think we need to see, or what I think we need to see in order to get back on the uptrend path. I think that now I've added this downtrend line. So before, we were waiting for prices to get above in this area to indicate maybe a push higher to new highs. I think for a variety of reasons, the market has been pushed down further. There's a fairly significant amount of bearishness in the market. We need to get and close, for starters, above this downtrend line for us to be able to create a base that will push up to higher highs. I think it's likely we'll see prices come up in here somewhere and then maybe fall down further. That's sort of my expectation. If we close above this trend line, then we might have a better chance of resuming the uptrend. But I think caution is, based on all these indicators here, I think caution is advised for new positions. I think you should consider taking profits where you have them before they disappear or perhaps go against you. So I think that's what we're looking for on the upcoming week. Let's take a look at the this week's top stocks watch list. This let me get rid of all these other scribbles over here. Looks like a kid's drawing. So I think what you need to pay attention to here is no matter what stocks you own, because the earnings season is right around the corner. If you look at some of these earnings dates, they're middle January, end of January. In some cases, you've only got a couple of weeks to go before earnings. I don't like buying stocks within 2 weeks before earnings, unless they're making a bull run, in which case I'll get out before earnings. I think this earnings season, what we're going to see here is pretty good earnings, but I'm very cautious about the guidance that the senior officers will provide as part of the earnings announcement. These guys want to cover their future business shrinkage. It should, the situation with interest rates and inflation really hurt their businesses. So they'll be watching to cover that. Like I said, I think earnings in most cases will be good, but guidance is going to be suspicious or cautious, and in many cases that's what pushes prices down. So I think you really need to be cognizant of when earnings is coming out on stocks you own, unless you're willing to hold through earnings. I think that's a risk this time around. So that's the earnings situation. Let's sort these by industry, and we'll see what sort of industries are sort of on the list. I think there'll be a little bit of a change since last week. So again, you see the banks. The banks are pretty prominent here. There's a mixture of defensive, and by defensive I don't mean military defense. I'm talking about defensive type stocks. These are stocks of companies that don't get affected by large pullbacks. There's healthcare, household durables, insurance. I mean, these are companies that when there's a downturn in the economy don't get hurt real bad, because it's not like you're going to stop eating or going to the doctor or stop insuring your car, that sort of thing. Oil, gas, and consumable fuels, they're just on a run, partly because of projected shortages, because of administration policies, and that's all I'm going to say about that. And then, of course, we see the semiconductors and semiconductor equipment that are still bullish, but in many cases have pulled back a little bit from their highs along with the rest of the market. Again, on this spreadsheet, you can see the position of the weekly 3x8 indicators and the daily. These columns here, continued bull is continued bullish mode, bearish, and you can read about the rest on my website. There's the ADX column and the correlation. So let me show you where you can get these from. You can go to my website, and you can click on this link right here, and you can download either a PDF or an Excel file like I just showed you. So you would have to click on here and then go to that to get the top stocks of the week list published every Sunday. And also you can get a week of the top, a list, I'm sorry, of the top ETFs at that link. So I hope this helps. Please subscribe and share if you get any value from these. That would help you out immensely. Hope you have a great week trading, and I'll talk to you next week. Thank you.